Hello everyone. In this video, we are going to explore what happened to Nifty and Bank Nifty. Typical expiry day I would call. The Nifty started off with a low and then quickly it recovered in the first 15 minutes candle. And then there were like so much of consolidation throughout the day. And towards the end, it made a slightly positive close. And then if you check, it made a change of about 5 rupees from yesterday, right? So the close was only about 5 rupees down from yesterday, but the reality is that it made a move of around 300 points from low to high, right? So implying that there is still a lot of momentum, still a lot of volatility, and just the volatility has kicked in, and the premiums are appreciating. All that is good, uh, except that there was no breakout eating away all the premiums of this expiry. In fact, the coming week's expiry premium is also like wiped off a bit because of today day-long consolidation in this particular 150 points. Uh, Having said that, I would also see this as a much needed day because after continuous fall, the market has taken a breath, and then this whole day it has cooled off the RSI. You can see that the RSI has reached 52, which is a good indication because even if the market wants to go up or down from here, say around 800 points in Nifty, then this cooling down of RSI will help in regaining that momentum, right? Particularly if it is a downward move, this is an excellent pause candle because if you convert this into a day candle, you will see this as a very nice consolidation, candle, and it will continue to fall. Like you see that the market has taken a deep fall, it paused a bit, and then it went up, and then it fell down. Again, it has taken a pause. So the subsequent falls could be much larger. So that's the day candle outlook. But since we are analyzing in 15 minutes, let's stick back to that. And what we can expect for tomorrow is an high volatile Friday. We can expect some sort of breakout. So usually the breakouts happen on Fridays or Mondays. If these 2 days are missed out, then certainly we can expect something on Tuesday. So tomorrow I am expecting some sort of breakout. Um, let's explore the FASP levels in order to understand where we can expect the market to reach, right? So the T7 levels on both the sides, 18,150 on the higher and 16,970 on the lower side. So if you are an option writer, comfortably you can go ahead and then write 18,150 and 17,000 strikes. And as and when the market reaches T4 levels on either side, you can square off because holding it beyond that position will lead to losses. So that's a safe exit points. Like three levels away, you should exit. As long as the market is within T4 ranges, you can comfortably write T7 levels and then collect the premium for rest of the day because there will be high-end action. So why T4 as stop loss? Usually I say one level down as stop loss, right? Why T4 as stop loss in this case is because you see there is a range zone, right? At T3, 17,800, there is one zone. On the downside, 17,300, there is another zone. So these two zones are going to be acting as strong support and resistance. If it manages to breach on either side, then it's going to trend further. That's why I said T4 should be the stop loss for writers, right? And for an option buyer, wait for the first 15-20 minutes, see where the market is opening. You can initiate a contra position at T3, right? And then keep trailing it towards the pivot and keep T4 as stop loss, right? If you want to be in the direction of the trend, but wait for the breakout because this is a strong reversal point. If it is breaches and then crosses T4, then you can continue to ride on the same direction. Like you can initiate a C position once it crosses T4. And before that, if you want to enter, you should play contra positions, right? Similarly, on the downside, if you want to play on the PE side, then you should wait for T4 breakout. Then you can continue taking PE position, keeping one level above as stop loss and continuing to take each level as trailing stop loss, right? So that should be the game plan for option buyers and writers. So Nifty has taken a good consolidation for the old day. Also, it's ready to take the next leap. Maybe it could be on the higher side or the lower side, but my view is more on the bearish side, because if the market breaches this level, I'm expecting it to reach sooner around 16,800 and 750 levels. This is where my target is. And if this level is broken, I'm expecting it to be reached in within 10 to 15 days. So that's the game plan for Nifty. Now let's explore the Bank Nifty. Bank Nifty also had a similar pattern. It just opened and then went and took a support at the uh, support zone, and then it continued to rally up. Then each candle was green, red, then it started consolidating. Finally, it broke on the higher side, gave a close, but it's not a much bigger breakout as compared to Nifty. Yes, it is a bigger breakout, but then we never know. This could probably be a trap, because we have seen multiple times these sort of clear closure on the higher side, but next day giving a significant gap down. That's quite possible. However, this is not a confirmation that the market has reached the higher side. We have to wait and watch. For the first 1 hour, what market is going to do is very critical, right? So we have to also see what are the T7 levels on both the sides, FASP levels. 41,700 on the higher side and 39,800 on the lower side. Comfortably, you can go ahead and then write these positions. And what will be the stop loss? The stop loss will be T5 on both the sides, because Bank Nifty has extraordinary volatility. Maybe you can, if you want, you can also go ahead and then write 42K and keep T7 on the higher side as stop loss. If you want to play absolutely safe, then you should write 42,000 CE and 47 as T7 as stop loss. And for here, you should write 39,500 and then keep T6 as stop loss. That should be the case, right? Like T7 on this side as stop loss and T6 here as stop loss. Okay, so that's the game plan for writers. And again, there is a great possibility that it might break out on the lower side. But before even it could break out, I am expecting maybe 1 or 2 days it will test this zone before before it makes a clean fall, right? So that is a great possibility. Or there is another possibility that it might give a gap open and then reach around 41K, 41,100. From then on, there could be like series of red candles like this, and then dragging it down and then testing it here. Maybe once or twice they will try to breach this zone, but then again they might come up. Maybe Monday or Tuesday they will finally break out. And once that breaks out, I am expecting a 2,300 points fall. So you can expect Bank Nifty to reach 37,700. So that's my target for next couple of weeks, right? For option buyers, what you can do is wait for the first half an hour. Just give up, because the premium fluctuations are very high in the first 15-20 minutes. Just give away that first half an hour of trade, and then see where the market opens. If it is reaching at 41K or 41,100, then that's a good place to take a contra position and keep one level above as stop loss and one level below. You can after which you can start trailing your profits towards the pivot. Similarly, on the downside, wait for market to reach T3 levels. Enter here for CE positions. Preferably, if there is a significant gap down, you can also find an entry at T4 for contra positions. And if the market is already opening at, say that there is a huge gap down, then please stop doing everything, and then don't even initiate any C position, P position, nothing, because this is a very sensitive zone. If it breaks, the fall will be like unmatchable. Like you will be seeing series of fall. Like each candle will be like 200 points, 250 points long, and then it will continue to fall faster. So if you see a massive gap down or gap up, wait. If you see a small gap up, like 200 points higher, 300 points higher or lower, then you can go for a contra position. Or if you really don't want to take any sort of risk, you want to play by the direction, say that the market has cleared T3, enter into T3, keep T2 as stop loss, keep trailing the higher levels, and then go for T7 as target. It's all absolutely your preference, your risk appetite. People who are not comfortable with playing a contra position should strictly play in the trend, with the trend, right? And I will also be sharing all the inputs during the stream. Something I tried today, maybe this is like this. I created something like for trend related entries. What is the CE? Where you should enter? Where you should enter on the PE side? For contra traders, what is the entry for CE? What is the entry for PE? I started sharing it during the live stream, and a lot of people took some good positions, and then even I took some positions, and it was really rewarding. Maybe you can also join the stream tomorrow if you want to get to know these levels, and I'm sure it will be of good help. So that's the update. If you're a writer, go ahead and then write 42K and T7 or T6 as stop loss. On the downside, you write 39,500 and keep T6 as stop loss. And the entries for buyers is clearly mentioned for towards trend. You should know that wait for the T3 levels on both the sides, and then keep trailing. If you are wanting to take a contra position, again T3 is the level. So do not initiate any positions before T3. That's the message. And we have also seen what is the trade setup for Nifty and Bank Nifty. Tomorrow it's going to be extremely high volatile day. If you're a beginner, if you have somebody who has lost money in last couple of days, please avoid tomorrow. Tomorrow is going to be extraordinary volatility because algos will hunt the stop loss at all sides, right? And there will be a lot of big candles like 250 points candles in 3 minutes, 4 minutes, 5 minutes candle. You will see 200 points movements. That sort of volatility is expected, so please refrain. If you're if you're someone who is not comfortable with Fridays, or if you're someone who has lost money in last couple of days, please do avoid tomorrow, right? So that's the update, guys, and see you all in the stream tomorrow, and catch you with another update on the trade setups. Thanks.